market structure for digital assets has been changing drastically in the past 12 to 18 months. Market participants have changed, the depth of the markets and liquidity have all changed. This creates opportunities and risks that need to be monitored. Welcome back to Crypto Clarified. My name is Benjamin Dean. I'm Director of Strategy for Digital Assets at WisdomTree. Say his name and he appears. Also, I have two guests with me today. Thejas Nalval is here. He's CIO and co-founder at Parataxis Capital. Our own global CIO, Jeremy Schwartz, has come back. And we're going to share a very interesting discussion with you today. US listeners, WisdomTreePrime.com on the Apple, Android app stores. Subscribe and share this podcast. Love sharing good information with folks. And you can always find me on the Bird app X at Benjamin Dean. Let's jump straight into the interview. I hope you enjoy it. Thejas, Jeremy, welcome to Crypto Clarified. Jeremy, this is, I think, your third time, but Thejas, welcome for your first time. It's really nice to have you here.
Likewise. Thanks for having me, guys.
Always great being with you, Ben.
I know your organization is called Parataxis, and so Parataxis is a Greek word. It means that during this episode, you can't use conjunctions. You need short, simple sentences. You can use coordinating, but not subordinary conjunctions, though. So I hope you're ready for that, because that's the definition of Parataxis.
Well aware. When we chose that name, one, the website was available, but two, it was just my partner and I. And Parataxis by itself, it means when you have two phrases or two words, it's a literary technique. When you have two words next to each other and there's no inherent relationship, it's up to the reader to find what that relationship is. So it's used in a lot of poetry, a lot of Greek writing. It made sense because the two partners and I, we come from very different backgrounds. We made our way into the crypto space. And one, it was a question that all of our investors asked us. Why did you guys come together? But two, what does that word mean? And so it's very helpful in the early days.
Well, I'm glad that things might get poetic today because we have a lot to talk about. My cybersecurity company I called Iconoclast, which is also derived from Greek. So I completely understand where you come from on that. Jeremy, I know both you and Thejas know each other, but what's kind of the story there and what's gotten us to where we are now?
Well, good to see you again, Thejas. I've been, I guess, for full disclosure to everybody, I'm an investor in one of their funds and strategies. I look at the space trying to get exposure to what's going on in the market and having somebody who can look at this on a daily basis, all volatility. Yes, I've got some Bitcoin exposure and some others, but if you want to have something that's moving around, I thought I had him on Behind the Markets a number of years ago talking about the approach, and I thought it was sort of interesting to have a more active mandate and go long, go short. But so Thejas, I'm curious on where the current is. Like, what do you think of this market environment? Love to get your updated take on what you see in the asset class, how you see the high levels, and then we get into some of the individual themes. But what do you think? What's going on right now?
Yeah, so it's been a volatile year so far in the markets. I think it's really just the markets adjusting to the new paradigm, both on the political front and there's a little bit of turnover from folks who may have bought into exposure last year, may have just been generally long risk assets for the past decade. So in my mind, it's a bit of a wealth transfer from folks who would otherwise not have been long this market for much longer. So a lot of that just been pushed forward. And the crypto space is I've always believed is a market that evolves at a cadence much faster than traditional markets. So even one quarter in the crypto space may represent the market psychology and the market movements of the equity markets over the course of several years. So what that means, you're going to see a lot of movements to the upside, to the downside, but it's a giant readjustment. In our view, it's healthy, it's necessary. A lot of it is just noise. a lot of supply, especially as it relates to Bitcoin and some of the products there, has been from folks who are a bit more short term in their holding period, folks that were playing the ARB, being long certain products and shorting futures against it. And so, in my view, it is a bit of forced selling that took place this year, and so that's again, it just happens very, very quickly in the crypto space. So that's why you see the market, sometimes down, double digits in the course of a month. Fundamentally and structurally, the environment has never looked better. The space has never had a pro crypto administration or pro crypto regulatory body. So fundamentally, the road is clear ahead. But what took place this year has just been a bit of noise and just some rebalancing from short-term holders to folks who are a bit more longer term time horizon.
Let me jump in with a question. So when I think about the trading and the ARBs that you're talking about, sort of the Bitcoin versus futures, there's some other activity going on right now. Just this week as we're talking, there's one of the other places where has been all the demand for Bitcoin coming from. You've got a quote unquote whale in the market with Michael Saylor and issuing his preferred stock buying Bitcoin. There's people who now he was issuing some of these preferred stocks with like no interest, like his cost of borrowing was like close to zero. And he's been having to pay more. Like I think that this week there's stories of like a 10% preferred, or like the yield is going up to 10% now. If maybe the price is down, maybe that's the story I was reading. But there's some concern actually on what he has an influence on the market is. As a hedge funder yourself, is this a trade you're watching? Is this one of the risks to the market you're watching? How do you think of Saylor's impact on the market?
We actually just spoke about Saylor and really some of the products this morning on our investment committee call. There are trades that one can play using I think it's using one of the products that has the upside, playing that versus the other product that doesn't have the upside. So there's a difference in coupon rate. But there's an ARB that we're looking at. It is a bit more structured in nature, and I think we're going to see more and more products like that. In my view, they're all just distribution pipelines. They're ways to appeal to a different investor base, and effectively at the end of the day, the end goal is to get more capital into Bitcoin itself. Just the way that financial markets have evolved and the breadth of investors that exist. There are folks who will some just outright buy spot ETFs. There are folks that will buy Bitcoin itself and hold it in a self-custodial wallet. There are folks that will come into funds like us. And there are folks that prefer products like the one Michael Saylor's are putting together. So it's a structured solution with the same end goal in mind. I think the risks there are it's a bit more overblown than it should be, and it's just a function of the fact that a lot of financial discussions happen on Twitter, and unfortunately, things that go viral are the ones that are a bit more sensational in nature. I don't see a perceived risk there today. I think we'll actually see more structured products be announced, not just by Michael Saylor, but by other entities over the course of the year. And in our view, like we're still fundamentally very, very constructive on Bitcoin's price by the end of the year. We see just more of a demand imbalance, especially with the U.S. announcing their strategic Bitcoin reserve. You can take either side on what that means, but the game theory Nash equilibrium is that other nation states, other large entities will likely do something very similar if there's any sort of signal that the U.S. government is pursuing their budget neutral strategy to acquire more Bitcoins. So I think the demand out there will actually manifest and come into Bitcoin's price, whether it comes directly into Bitcoin, whether it comes into an ETF, whether it comes through a preferred vehicle. That's really a function of who the end investor is.
We had Dan DePiro on the podcast a few weeks ago, and this came up. I lived in Bhutan, and they're one of the world's largest governmental holders of Bitcoin and have been for many years. I mean, the Bitcoin strategic reserve is really that Bitcoins were confiscated and sold on the market at what now would have been, they would have been profitable if held. The market participants changing. Tejas, you just mentioned Michael Saylor, but I'm noticing like Metaplanet in Japan, they have issued a 0% convertible bond to buy Bitcoins, and they bought the Bitcoins, right? There's one last element here, wrinkle, because I always talk too much. So if companies like what's now called Strategy enter the NASDAQ index, whether investors like Bitcoin or not, if they own QQQ, they own Bitcoin by proxy. And so all of that, that's all demand side. And we know the supply side is constrained. So those market participants, it's totally different to even 18 months ago. And it's fascinating to see how that plays out. I'd welcome any more thoughts from Jeremy or Tejas on where you see this going, because I think, Tejas, you're correct that that structurally it is stronger and stronger and stronger, but I always see a lot of shade thrown on this. But I would have thought if something's up 12,000% in the last 10 years, and that's a provable fact, that the shade wouldn't be thrown. But here we are, kind of interesting.
It 100%. And the reason why shade is thrown is because everyone's entering the market at different times.
Okay.
At the end of the day, yes, if you just bought and held Bitcoin since the beginning, you would have been very happy. Most folks don't, outside of a few, I guess purists. If you just bought and held Amazon stock, since the early 2000s, you would have been done very, very well. But most folks, I think, sold when it was down 80%. So it's market psychology at the end of the day, and Bitcoin's the crypto is a very easy topic to talk about amongst your peers. It always comes up in conversation, even when I'm not trying to have that conversation with folks, with my neighbors. And so I think everyone is looking at Bitcoin's price. Everyone's looking at different digital asset prices, and everyone enters the market at different times. And at the end of the day, if I don't know the exact scientific or the actual psychological
animal spirits is what Payne said.
Well, exactly, but there's this dynamic when you buy something. If the next day, if it isn't up from your entry point, if it's down from your entry point, most folks, 9 times out of 10 feel bad. And
prospect theory,
right? Exactly, and so
prospect theory.
That's what drives some of these exuberant markets. That's what drove when in 2017, Coinbase was kind of becoming this thing amongst retail investors, and folks downloaded the Coinbase app, they bought Bitcoin, they bought Ethereum, and it went up, and they told their friends, and everyone did the same thing, and that dynamic went on for the better part of a year. We don't have that type of market anymore, and so we're no longer in a trending market like that. We're more in a catalyst driven market, and as a result, you have to buy when there's weakness in the market if you want outperformance versus a pure buy and hold, in my view. But it's very difficult psychologically to do that unless you're a professional investor, unless you're a fund investor. And so for most folks who are just trying to trade this market themselves, they end up, in my view, kind of being their own worst enemy, because they buy tops, or they buy when the market's a very, very exciting thing to talk about, and that usually is preceded by a market moving lower, some volatility like we're seeing now, and then they sell and they get out. But all it takes, and this was evidenced by a couple of weeks ago when there was that tweet about the strategic Bitcoin reserve and the assets moving into that Bitcoin reserve, and it happened on a Sunday morning. The market's up 20%, or some names are up 20% in the span of a couple of hours. That type of market is the market that we're living in today. It's very catalyst driven. not unless you have inside information about what's going to be tweeted out or what announcement is going to occur. The inherent cost of being out of this market during those days is in my mind much larger than experiencing some mark-to-market volatility, because you're long and prices moving up 1 or 2% every single day.
It's a lot of thoughts on that, but I'm conscious that I always talk too much. Jeremy, do you see this kind of dynamic in other established markets, or is this something you've seen as markets evolve? And that could be the structure of the participants, liquidity, some global nature, 24/7 trading. Is this kind of thing you've seen before in other markets?
Well, it's very, and we do a lot of work in commodities, we hate making the analogy that Bitcoin's digital gold because you can actually tokenize gold and actually do that. But, there's this narrative of you have a fixed supply of gold. And so it's really just what is people's view of it. And then there's, it's a demand supply question, like Tejas was saying on these. You don't have an earnings stream from Bitcoin. It is very much in that economic relation, very similar. So you need more buyers to come in and create the demand, and then you have a fixed number of sellers, and that's the real dynamic. So I love his commentary of looking for the catalysts of what are these catalysts that are going to spark more demand. Where are people in their adoption curve? Like when you go to groups of advisors, we're dealing with advisors all the time, and it's like, well, what do you think the person next to you is going to do? Have they actually allocated, or are they still not allocated? And I think the advisor community has been slow because A, the volatility, B, it was tough to do to put in client accounts. That's partly where the ETF was one of the catalysts in the market to get, as when there was 10, 11 of us putting ETFs in the market in the US, that was a big catalyst for adoption. All right, so now you've got Bitcoin, you've got Ether. The question is, Europe has been so far ahead of the US. You've never really seen the US lag in innovation. So what Tejas said, you've got an administration now, very different administration, that is trying to be innovative and view this very differently. Our CEO is now was at the Digital Asset Summit in DC a week ago. We did a podcast on Behind the Markets talking about what he saw there. So there's going to be more use cases. The question is, where are people in that adoption cycle? So Tejas, I'm curious from your side, as you look at investors in your fund, who are they? I'm just an individual. I'm in the space. Yeah. You could say I did it for my personal account. This is not, for clients. You say I'm somebody who's in the investing world, but who looked at it and said, hey, I want somebody who can look at this actively and make these more tactical decisions than I could on a day-to-day basis. Who are your typical clients? Is it institutions, advisors, individuals? How do you think about it?
Sure. So we run several funds. Each one has a different risk return mandate. Some of our funds are more directional in nature, where we aim to outperform a buy and hold. And we run a credit fund as well, which is a bit more fixed income oriented. And we run a multi-strategy fund, which is just controlled volatility and controlled drawdown. We've come to learn that every investor cares about different things. They're at different phases of their own personal market cycles. So it made sense to have several types of exposure that we could offer. So in our directional funds, it is largely folks that are comfortable with the volatility. What's fun today is that all of our investor conversations are actually pretty deep in the weeds on market structure and spot versus futures versus ETFs, and actually talking about the space in the way I love talking about the space. Versus, I think when I first entered the crypto space, it was a lot about talking about blockchain, talking about what the future of this industry would look like. So most folks have their thesis. They have a thesis. It's really what type of exposure, what type of vehicle makes sense for them is a question we always try to solve. So our directional funds is largely family offices, high net worth, and RIAs. But our yield strategies and our multi-strat, it does lean a bit more institutional, and that's because again you kind of mentioned it, Jeremy. The volatility is a factor. Our credit fund has no volatility, and what that investor is looking for is more of a fixed type of return that meets a benchmark on their side. So The capital markets have been closed off to the crypto space for many years, and that allows fund managers like us to take the role of a bank or even a traditional sell side shop and actually structure loans and really look for sources of yield. I think the thing that our investors want, especially with our directional funds, is to be involved in the market during a bull market and in a bull run, which I think we're still in the middle of right now. And so if we can have maximum upside capture in this type of market, and then in a structurally bear market, not make any stupid decisions like over levering or trying to cash flowing knives or maintaining exposure to just bad counterparties and suffering a permanent impairment of capital, like over time compounded returns, we will outperform if you're buy and hold. And sometimes I think the value of us as a fund manager is really being forced to be involved in a market that's very difficult to live through. An example I'll give you is when at the end of 2022, after FTX and after it was just a very terrible year for the crypto space fundamentally and structurally. My view is a lot of folks probably missed the entirety of the run in 23 because they were just on the sidelines and waiting for just things to clear up a bit, and they probably gave themselves a year to just reassess. And that year, I think Bitcoin doubled. Most assets that were structurally oversold, like Solana, did a multiple of Bitcoin's returns. And so the cost of just being out of the market for that time period, was high. For a fund manager like us, it's true we suffered some volatility in 22, but we tactically rotated to some of the heaviest hit names at the end of 22. And which it just bode well for our investors in 23 because that allowed us to really almost double Bitcoin's returns that year. So, we have those extremes. It's not every day, but I think just being involved in the market when it's psychologically very difficult is sometimes the value of a fund manager or an advisor or someone who just understands what the nuances of the market structure are in real time.
There's a lot of ideas packed in there. One of them is if one of the large market participants tries to start selling their holdings, which we saw Tesla do a few years ago, can influence market. At the same time, the markets are deeper, so it's not like when Mt. Gox or even FTX, as you rightly say, Thejas, blew up, and then it's like, oh, well, we don't like it. There's a third one that, because of the company I keep, people, well, essentially you'd say, well, why do they want Bitcoin, right? Why would someone buy cocoa? They like chocolate. Why would they buy gold? Well, long-term store of value. Why would they buy lithium? Well, it goes into batteries for electric cars. It's mostly produced out of Afghanistan. In this case, it is a little bit like, well, why would they want Bitcoins? Well, it turns out Bitcoin has outperformed a lot of fiat currencies. And Dan said this the other week. Some fiat currencies have lost 99% of their value in the last decade, but you can buy Bitcoins, which are up 12,000%, right? Mm-hmm. So there is also like, and people used to say nobody uses it for anything. Well, I use it all the time, but I may be atypical. That confluence of factors, and in a way, the point you made before, when we see something like the changes in administration and the regulations, the approval of certain products that give better access, safer, more reliable, it all, there's a confluence of forces which can be also, the inverse can also happen, but the markets are deepening. Anyway, I'm talking too much. We're coming up on the end of the episode, so usually we finish these episodes by asking guests about what they have their eye on in the future. And that can be around crypto digital assets. That can be just broadly. But whenever we've got very knowledgeable guests on, and you both qualify, we ask their thoughts. Jeremy, I might ask you first, then Thejas, we finish the episode with your views, and I kind of leave the floor to you.
If I'm going to leave with another question for Tejas, because I'm very curious to get his views on this question is, when I gave the analogy that some of crypto is like commodities and gold. And, one of the things about commodity investing that I see a lot in the US and a little bit, we're a leader in commodities in Europe, gold has a special place for people in the role of portfolios. Like I don't have the exact number at the top of my head, but it's probably like 5 or even maybe somewhere between 5 to 10 times more assets in gold products than there is in broad commodity products in the US, as an example. And now in the US, we only have Bitcoin and Ether. They're these sort of two one-offs. And I wonder, when will the broader baskets, like will there be an S&P 500 type basket of crypto that comes to market? And we're looking at these types of index type solutions or just broader exposure. The U.S. is lagging behind Europe. In Europe, you can have these products in market today, these sort of broader baskets. But the question is like, well, is there something about this space and where is Tejas seeing the opportunities in it that's going to go beyond? So that's my final question for Tejas to think through. But on a view, I mean, I think where right now you have the administration, he's creating a lot of volatility for even just equities. People trying to understand what the tariffs mean. There's the war resolution in Ukraine and Russia that he says he's going to help end this war, and you got all this negotiation right now. I mean, I think the war also is what brought some light to the value of Bitcoin. Is, hey, if I was a Russian and I had access to my bank and I'm now cut off from the world, you understand that you need some outside of the traditional banking system for half the world. Maybe U.S. people think their money is safe in the bank, and it is, but you're half the world that they don't feel the same, and they need to be able to go around the world with the coin. So I think the geopolitics today is very, very interesting. How it gets resolved, where it goes. I think there's going to be more catalysts, that he just said, of more adoption to it. So I think it's interesting, and what's going on in Europe is some of the most interesting. And in this space, it's amazing that Europe has beaten the U.S. I hope the administration helps change that. Yeah. We're gonna be trying to fight with them to help do that. But Tejas, any comments to that other question?
So I just want to piggyback on the gold comment. So I know the pitch for Bitcoin is digital gold. I think that pitch needs to be adjusted a bit. I think it is our kids and our grandkids digital gold. Today, it is very much still a risk asset in that, folks are viewing it as a hedge against other beta exposure, and it trades like a risk asset. So I think sometimes when you say it's digital gold, but you see this thing trading 90 vol, it's two contradicting statements. But I think it represents, it has the properties of gold, has properties of something that is scarce, that is non-sovereign, our kids and our grandkids will eventually just gravitate towards more so than gold. Gold is what it is today because of the past, 50 years of financial markets, but also beyond that. I come from an Indian background, and in India, everyone is all that gold. So like, I remember even since I was a small child, my grandmother would always tell me to take some money and buy gold with it. And that's every Indian household in India has a closet full of gold, because that is what they believe. So it's a belief system that manifested over decades, centuries, and they never sell. They will never sell their gold. They will just pass it on to the next generation. So I think you'll start seeing that type of dynamic occur with Bitcoin holders over time. But I think the pitch with Bitcoin has to be, this is our kids and our grandkids' digital gold, and that's what you're investing in. So that's my pitch with Bitcoin. What I tell folks. To answer your question, Ben, what I'm interested in, I'll remove it away from crypto. I think I saw something yesterday about. I think Elon was talking about robots and the use of robots, and I think that his view is in 5 years everyone's going to have basically a Tesla robot or some sort of robot in your house, performing tasks, and that's just such a short term time period, right? So, and I think about all of the use of technology today in my house, which I wouldn't even fathom 10 years ago. So that's something I've been talking about with my kids. Quite a bit. My kids are very young, but how would a robot be interacting with them? How would they use it? And so I think that's something we're going to be personally going to be paying more and more attention to over the next few years.
Excellent. I had a guest on the other week who said it's a similar answer. And I'm also looking at the robot thing as well. So thank you so much for that. And thank you to both of you for joining me today. We are at time, unfortunately, but I hope, Jeremy, I know you kindly come on often. Thejas, it'd be great to have you back on again. And maybe we can talk about robots a bit and AI agents and how that's influencing the market structure, because this has been a fascinating discussion. I thank both of you for joining me today.
Appreciate it. Thanks, guys.
Thank you.
Well, there you have it, folks. Thejas Nalval, CIO and co-founder at Parataxis Capital, Jeremy Schwartz, global CIO at WisdomTree. Thank you for joining us today. I'm glad you stuck around this long in the episode, because now you get the best part, which is the disclaimer. I need to state the following to clarify the views and opinions expressed in this podcast of those of WisdomTree and Parataxis Capital and are subject to change. Anything we presented in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities or reliance upon them. So the sole discretion of the listener. Please remember, past performance is no indication of future results. Well, it's always nice to have you here. I look forward to having you back on Crypto Clarified, but US listeners, WisdomTreePrime.com, Android, Apple app stores. As I always say, subscribe and share the podcast. And you can find me on the Bird app, X at Benjamin D. I hope you enjoyed the podcast episode, and I will see you again, hopefully, next time.